Mr. VS Parthasarathy joins us, Group CFO with Mahindra & Mahindra. Mr. Parthasarathy, morning. Nikunj joining in from the Mumbai studio. I guess my colleague Karuna has really put the context here. Markets believe that there will be a slowdown in tractor demand, in the car demand, largely because of high interest rates. Is there merit in believing
that? Very good morning. This is currently there is a scenario of lot of despondency and lot of issues that are being portrayed. I am a harbinger of good news. Okay, I believe there is fundamentally nothing changed in India. The GDP growth track story is still intact, the rural story is still intact, and the consumption and demand story is still intact. So there has been a little bit of setbacks, whether it is in terms of the liquidity, whether it is in terms of currency, whether it is in terms of, as you said, some news about monsoon, which I will be happy to clarify. But broadly, the consumption and the demand story is very much alive and kicking in India.
When you say that nothing has changed at a fundamental level, I understand that and I completely endorse that. But interest rates have gone higher. Cost of running a vehicle, which is fuel prices, that has gone higher. Now, there are aspirational buyers and then there is an affordability angle. Now, aspirational buyer may not think twice before buying cars because that's need based and that's aspiration based. But what about the buyer who essentially may feel the pinch of an EMI, may suddenly feel the pinch that, going from Worli to Bandra is going to cost more. What about the sensitive buyer? You think that could take a back seat?
First and foremost is that interest rates, in a sense, to put it in perspective, yes, it had stayed, it has gone up 50 basis point over, because of two increases. However, this has already happened and that's been factored into the pricing of various people. Some of it may have come earlier, some may have come recently, but it is already factored into the pricing. And I am not saying that the material cost has not gone up, but in an economy like India, a little bit of inflation is actually like good cholesterol. It doesn't harm it, it just gets the impetus of the overall economy going. When you come to individual buyer, it is a fact that anything which is an increase does bother them. It is not that we can't say, but these are increases which are not of magnitude, which kind of changes the trajectory. The fuel prices is a small concern, but I would put it as a concern and not something which kind of derails the demand story that we have here. In fact, I see a very strong demand story which is going forward.
Mr. Parthasarathy, good morning. Monsoons have not been up to the mark this year. Cost of owning tractors has gone up. Again, the same reasons that Nikunj cited. I think it's just plaguing all segments of the industry. Can rising inflation decelerate auto growth? What could be the potential impact of that on earnings?
Okay. So let me take parts of your question. First part is in terms of monsoon. Okay. And I want to put that in context, and this is a fact which is available. I'm just putting it in a different context. If you take east and northeast out and compare the rest of India in terms of the monsoon last year, then you'll see that it is 96% of the long term average. So therefore, India as a whole, except for east and northeast, has received a normal rainfall this year. Add to the fact that the reservoirs at most places have been more than previous year at the same time, also augurs as we exit out of the monsoon and into the balance of the year. So overall, if you look at monsoon, and even in Jharkhand, which is in east, has adequate reservoir even though the rainfall has been less. So therefore, it does not in that form impact, and I would therefore call the monsoon as adequate for whatever growth story we need to have. So I'm calling that as a positive, with certain amount of concerns. 2 or 3 states have concerns, we can't negate that, but overall India as India, we are good in terms of our monsoon and in terms of our water reservoirs. Second thing is in terms of material cost, in terms of interest rates. What I am saying is that there are certain increases which has happened. These increases happened previous year when we had a 30 and 40% growth. Yeah. So therefore, these increases should not be blown out of proportion to create a cost. What we would like to predict is a doom loop, that everything is impacting. What I am trying to say is that we are in a boom loop, and unless we deregulate ourselves, we are perfectly in a boom loop and our growth story. Take for example tractors. I think the industry growth is predicted at 12 to 14%. I think that story is very much alive, and that kind of growth is certainly possible, and that is what the industry is predicting, and that is what M&M is predicting for the industry. Coming to Q2 versus Q3, you have to remember that versus last year there is a major shift. All the festivities were in Q2 last year. That all is in Q3 this year. This major change, changes the base dramatically, and therefore comparison year on year for those months, you should compare Q2 plus Q3 once the Q3 is there. And as we go into the festivities, I see a lot of positive sentiments in the rural market. So I don't see anything which will detract us from the growth story that we have in the rural market.
Okay, that's encouraging to hear. Could there be a scenario where OEMs have to dole out discounts to boost sales? I think that's the hot topic of debate right now. Could we have reached the peak of the rural upcycle where there would be a strong sales push required?
Recently I was in a JP Morgan seminar in Delhi, and I talked about how our rural cycle potential is far higher than where we are, and there is huge amount of headroom for growth, including in exports. We are seeing the cycle and the rural market adjust to any supply requirements that comes out. So I would not say we are in the rural upcycle. What I will say is we are in a good cycle, and we have a lot of headroom in the rural market. So I don't think we should kind of conclude that there is a down cycle coming. This can go on. We just do hope that the next couple of cycles of rainfall turns out to be normal, but that's 1 year away. As of now, we seem to be on the right track and the right trajectory. You had another question which I think I missed. If you can repeat that part, I can answer that.
I think you've pretty much covered ground. I was just wanting to understand from you whether there is need for a strong sales push as a strategy to spur demand.
Yeah, you referred to about discounts. I'm sorry, I didn't cover that specifically, but I don't think there is fundamentally any change, and therefore whatever tactically done will be done by companies, but fundamentally there is no change.
Okay. Mr. Parthasarathy, I know you said that you're the harbinger of good news. So will you have to revise or lower your FY19 guidance, or are you sticking with it?
I am. First is that I must admit that Mahindra does not give guidance. But having said that, we say guide without guidance. And my guidance is that the trajectory of growth that we had outlook at the beginning of the year, that we are outlooking right now, are same, and that's what I would continue to believe and plan for as we go forward. So no change in either our stance or my smile.
Okay, and I meant only qualitative guidance. I know you don't really give out numbers. But tell me, second half is quite critical for you, sir, because you've got a couple of new launches as well lined up. There's also the festive season which kickstarts today. Do you sense that there could be weakened consumer demand, and there could be perhaps a hurt on your financial performance, or you don't think so?
Okay. So basically we cannot do away with the current sense of various problems that are there in the air and what it means. Okay. However, if we're going into the festive season with great amount of tailwinds with us, and basically those are from a demand and a consumption story point of view. These things, including some bit of liquidity scare that is there in the economy, and we can say that I had kind of suggested that the most critical thing now is to make sure liquidity is available, and I'm happy to state that we have made sure that liquidity is available both for us, our finance company, and for the customer when we go into the festive season. And therefore, I would like to feel that we are going in with a kind of speed and enthusiasm into the festive season. Having said that, what could be the financial performance for Q3 and Q4 is an important factor. Every quarter, every company now have to kind of stand up and perform. We hope that when we come back and stand before you after the Q3 and Q4, we will be able to justify both the smile and our stance.